This is the Friday, November 21st, 2014 version of the Market Plus segment. Joining us now is Don Roose. Don, welcome back.
Thank you, Mike.
We didn't address weather very much during the show. Has this snowfall and this cold snap done much to impede harvest in parts of the country? Have you heard?
Well, it definitely has. You know, if you look up around the Great Lakes area, Michigan and such, they're, struggling to get the crop out. I think we still have 40% of the crop yet to get out of there in corn. So, there are some areas, I'd say in the gut slot of the Corn Belt there, it hasn't been a real issue. But, yeah, no doubt there's some areas that it's really tough.
Has that led to any interesting basis plays for producers up in Michigan or those other places that were snowbound? Have we seen a basis response?
Not so much. I mean, it's, I think, but we have seen a basis improvement in some of the real demand areas in, the eastern Corn Belt. And as you get closer to the western Corn Belt, we've seen the basis levels, on corn and soybeans reach some areas that, really are target objectives, particularly when you have a 2 billion corn carryover and a 450 million bean carryover.
Now, and that kind of leads right into William's question. William from Hiawatha, Kansas is curious, with increased farm storage and a record crop, is the market going to have to bid up to buy this grain? Is that what we're seeing today?
Well, and that's a good question because I think that goes to the heart of the supply-demand situation, and it's really musical chairs because I can tell you the way the market's going to work is you're going to buy enough grain as the basis tightens up. It's not going to really necessarily be the flat price, and eventually you're going to reach where you see enough movement and the basis backs off again. So I think when you have a 2 billion bushel carryover, remember the government has cash corn average price $320 to $380 for this next year. So right now, fundamentally, we're an overachiever. We've got areas that the basis has reached proper objectives. So make sure you don't overstay your hand.
All right. And by proper objectives, what do you use to decide that?
Well, I think when you look at it, if you really believe that the corn 380 is at the top end of the cash market, which we do, when you have futures trading at $4 plus, that you're overvalued fundamentally, and particularly when you have some other issues like feed wheat from around the world coming into the U.S., we're sending the wrong signal. We need to send a signal to export our grain, and we're sending a signal to import not only corn but soybean meal.
And that feed wheat that's coming in from Europe, is that just so low quality that it's cheap enough to bring over? Is that what we're seeing?
Yeah, exactly. And they just have plain, just too much wheat, so they have to do something with it. And, and that goes to another problem because Europe imported corn from the Ukraine, so now that's backing up to the Ukraine, so the Ukraine has more corn to export. So, it's great to be in a world environment, but you have to make sure that you don't get too far out of it when you're looking at price objectives.
All right. And now speaking of price objectives, Kim in Eagle, Wisconsin is curious, what's your suggestion for unpriced crop? And let's talk about old crop, 14, but let's also talk a little bit about unpriced 15 and maybe even 16 crop.
Yeah, well, and I think when you look at 14, I definitely would look at the basis. If the basis has hit the objectives, sell the cash. If you want to re-own it with some options. So I think you're up at these areas fundamentally that you're at the top end of the range on the price. When you look at for 2014, when you look at 2015, there's some things that you can really do. Are we in a new price era or not? Well, it's hard to say. But you can still go to work and market for profitability. You can buy some 420 December corn puts of 15, sell some 520 calls, hope you get that as a target to the upside so you can give yourself a nice range. Same thing on soybeans. From a basis standpoint, it's the same. On 2015, you can buy $10 November puts and sell some 1180 calls. Give yourself that big range, 10 on down, still get a chance to get 1180.
All right. Would you look out at 16 yet at all?
I don't think it's too premature to look at 16, particularly if you use some of these window contracts where you buy like the same thing as we said on 15, only use 16, buy some 420 December puts, sell some 520, 530 calls out there, and the same thing on soybeans, because if we're in a new price era, this is the top end of the range, but you still give yourself an objective or chance to have some bigger moves to the upside if we have some weather problems. And 80% of these markets, I always say, are about weather. So we don't know what the weather's going to be out that far, but we do know we have a price that is at the top end of the range.
All right. Now, you mentioned on the show we're probably going to see the opportunity for some acre switching and that going forward. Do you think as we begin to prepare for the 15 planting season, we'll see as many folks planning to plant corn as we did in 14?
Yeah, it looks like we're probably going to be down 2 to 3 million acres on corn. It looks like we could be up 4 million on soybeans. What that does is gives you a chance to have a 600 to maybe even 700 million bushel carryover on soybeans if you get a big yield. You know, you think about it.
Yeah.
On the corn, even if we take the acres down 3 million, if you have a yield of 170 bushels, you still have a carryout of over 2 billion. So without a real weather problem, even if we have an acre reduction, you still end up with abundant carryovers, and that's the issue. You're lugging around too big a supply. Somebody around the world has to, if we don't have weather problems, has to cut back on acres.
All right. It's interesting, a $4 million increase, so 87 to 89 million bean acres potentially in 15?
We could have 88 million soybean acres, so that's a big number.
Yeah, it is. Now, let's talk a little bit on the demand side of the corn market. The RFS apparently has been punted again. What does that mean for the trade, knowing that the 2014 RFS regulations might not come into effect until 2015? How does that even work from a trader's perspective? Is there any way to capitalize on anything there?
Well, on Friday we had a real volatile trade as they were speaking because the market was, higher by, we'll say, like 16, 17 cents on soybeans. We went 2 cents lower. Same thing happened on corn. We went from 6 cents up to unchanged. And I think basically you're right. We did punt. We pushed forward. We kicked the can down the road again. All those things. And you can look at it both ways, and I think the trade is really saying, that they're confused on it because you could look at it as positive and say, okay, we held off, so it's going to be a positive, and we're going to increase the mandate or keep it the same. You can look at it the other way and say they're holding off and waiting for a reduction. You have to say probably odds favor reduction because remember that was their proposal for the 2014 lower it from 14.4 to a 13.2 billion usage.
And where is corn demand for ethanol at so far this year? Have you looked into those numbers at all? Are we getting close to that?
Well,
where we should be.
Yeah, we're over the production. We're going to have to try and export some stuff. The problem that we have with the export of ethanol is that Brazil is about 40 cents a gallon cheaper, so it doesn't work for us to really export. So that's the other issue that you really have.
Brazil, and we've got a strengthening U.S. dollar and a declining real in Brazil, if I'm not mistaken. So another issue there. Now, before we let you go, what are your thoughts as we look out on the broader, you've talked about being a globalized industry, we trade worldwide. As you look around the globe, what else do you see out there from other countries' economies? What are your thoughts?
Well, where we're at really right now, Mike, is the U.S. is the number one currency. We're just seeing a lot of investment coming into the United States, and that's, when you see China lower their interest rates because their economy is slowing, they lowered it, for the first time in 2 years. We see Europe is thinking about a QE program again. So, what's happening is the rest of the world is trying to put a lot of money into the United States. I think that's partly what's happening in the commodities, but also they're investing in the stock market. And, they think they can have a double-double. They can get the commodity going up and also the dollar going up.
All right. Well, Don, thank you for taking the time to be with us here this weekend. We appreciate it.
Thank you, Mike.
And thanks to all of you for sending in your questions via Facebook and Twitter. Please continue to do so. Tell your friends to do so, and we will continue to get expert analysis right to you. Thanks for watching, and have a great week.